Hi everyone, welcome back to my YouTube channel. This is Raz, and in this video, we will discuss about how to compute income tax for individual taxpayers who are mixed income earners. So if you're ready, let's start. So who is a mixed income earner? It is said that a mixed income earner is an individual taxpayer who earns income from various sources such as from employment, business, practice of profession, and passive incomes. So, if you are this kind of taxpayer who earns not just from employment but also is doing business or is practicing your profession while being employed or earns or derives income from other passive incomes such as dividends, interest, royalties, and so on. So you are said to be, or you are considered to be, a mixed income earner. You are a mixed income earner because your sources of incomes are mixed. The applicable income tax rates for a mixed income earner is for mixed income earners exempt non-resident aliens not engaged in trade or business, because as we know, these non-resident aliens not engaged in trade or business are subject to 25% final tax rates. So if you are a mixed income earner other than a non-resident alien not engaged in trade or business, the following tax rates shall apply to you. So for incomes derived from employment or your compensation income such as your basic salary or wages or allowances, or benefits or any other benefits or remunerations arising from employment are always subject to graduated rates. Always. So, meaning whatever incomes you derive from employment, whether you are a minimum wage earner or a managerial or rank and file employee, are subject to the graduated rates, and we have already known what is a graduated rates. Those are the taxes in a tax tables which gradually increases as your taxable income increases. While those incomes derive from business or practice of profession, if aside from being employed, you are also doing your own business or practicing your profession. For example, while being an employee, you also do online selling or you also do professional work for your clients if you are an accountant or an engineer or sidelines. Okay, so these incomes derived from business or practice of profession could be subject to either the graduated rates or the 8% optional rate. Well, it actually depends on how much is a total annual gross sales or receipts plus other operating incomes, because it is said that if the annual gross sales or receipts and other operating income exceeds 3 million or is more than 3 million, then the tax rate should be the graduated rates. Okay? While if the annual gross receipts or sales and other operating incomes is not more than 3 million or does not exceed 3 million, the taxpayer has the option to select whether he should subject this income from business or practice of profession to graduated rates or to 8% optional rate. It depends on his option or decision. So it means that the computation of income tax will get a little bit complicated if the mixed income earner, individual taxpayer, derives income from employment at the same time from practice of profession or business, and the total annual gross receipts or sales and other non-operating incomes is not more than 3 million. Because if that's the case, then the taxpayer could select the graduated rates or the 8% optional rate. And if the taxpayer would select the 8% optional rate, that would mean that we have to compute separate income tax for his compensation incomes and for his incomes derived from business or practice of profession. The solution would be a lot easier if the mixed income earner taxpayer would just select the graduated rates for his business incomes or incomes from the practice of profession and employment. Okay, because it would be, you will just add them together, all of them together, before we can subject to the graduated rates. But if the taxpayer would choose the 8% optional rate for his business or incomes from practice of profession, then that would mean we would first have to solve for the income tax for the incomes derived from employment and that is always subject to the graduated rates. For incomes derived from business or practice of profession, then you will have also to compute the other income tax that will be subjected to the 8% optional rate. So in later on in this video, we will discuss an illustration on how to compute income taxes considering these two income tax regimes. Okay? If a mixed income earner whose annual gross sales or receipts in other non-operating income do not exceed 3 million chooses, okay? If the mixed income earner chooses to subject his business or professional income to 8% optional rate, the following rules shall apply. Number one, his compensation income will be subject to the graduated rates. And that is always. Compensation income, graduated rates. Always. Okay? While his gross receipts from business and or practice of profession and other non-operating incomes will be multiplied by 8% without deducting the 250,000 pesos. In determining whether the taxpayer exceeds 3 million threshold, combine all gross sales or gross receipts in other non-operating incomes, but do not include the compensation income. Again, when you try to determine whether the taxpayer exceeds the 3 million threshold, do not include the compensation income. Okay? Just the annual gross sales or receipts and other non-operating incomes, which are obviously passive incomes, which are not subject to the final tax rates. Okay? A taxpayer who chooses 8% optional rate can no longer claim a deduction, whether itemized or OSD, because again, the 8% optional rate is based on the annual gross sales or receipts and not on the taxable income. However, a mixed income earner subjected to graduated rates or who chooses to subject his incomes to graduated rates on his business and professional incomes can choose to claim either the itemized deduction or optional standard deduction. And in computing the optional standard deduction, compensation income is not included because OSD is a business deduction and compensation income is not related to business. So do not include compensation income when you are trying to compute the OSD, okay? Passive incomes earned by the taxpayer which are subject to final taxes are no longer added in the computation of his taxable income. Because basically, when a passive income earned is already subjected to a final tax, that tax is a final tax. Meaning we are no longer required to subject that again to the regular tax because it would be a double taxation. If these passive incomes are already subjected to their corresponding final tax rates, then do not include those passive incomes in the computation of the taxable income subject to the regular tax. If that passive income or passive incomes are not yet subjected to final taxes, then we should still add those passive incomes to the taxable income subject to the regular tax. So let's have an illustration. Juan, a resident and citizen of the Philippines, is a senior accounting head holding a managerial position employee of ABC Company. While being employed, he also practices his profession doing mostly consultancy and audit works and has a small retailing business. For the year 2020, he had the following information related to his employment. So, we have here basic salary of Juan before deducting withholding taxes and contributions, that is 300,000 pesos. We also have here fixed monthly allowances, that is 50,000 pesos, and 13th month pay of 35,000 pesos, and also other bonuses, we have 61,000 pesos, and travel abroad airfare allowances shouldered by ABC Company, that is 65,000 pesos. We also have here travel and gas allowance for the conduct of the employer's trade, and that is 20,000 pesos. We also have here contributions to Social Security System, PhilHealth, and HDMF or Pag-ibig. We have 27,000, and of course, withholding taxes from compensation for the entire year, and that is 30,000 pesos. So these are just the information of Juan from his employment. So before we jump to our next slide, we will have first to analyze this problem. Okay, So this 300,000 is the basic salary of Juan in 1 year, and that is before deducting withholding taxes and contributions. We also have here fixed monthly allowances, and as we have discussed in our other videos, when the allowance is a fixed monthly allowance, it is part of the taxpayers or employees compensation income subject to withholding tax. So that means we will add this 50,000. We also have here 13th month and other bonuses. There is an exemption limit of 90,000 pesos. And we also have here travel abroad shouldered by ABC company. So this is actually a French benefit. But since Juan is a managerial employee, a senior accounting head, then this will be subject to French benefit tax. And French benefit tax is actually a final tax. So we will no longer have to add this 65,000 pesos to Juan's taxable compensation income. So we will just ignore that. Okay? But if you are going to compute for French benefit tax, of course, we will just have to divide this by 65% and times 35%. But since our focus in this video is how to compute his annual income tax, so we will just ignore this one because this is subject to French benefit tax. Okay? But if Juan is a rank and file, this of course will form part to that 13th month pay and other benefits subject to the limit of 90,000 pesos. But since in this case Juan is a manager, we will subject this to French benefit tax. Another, we have travel and gas allowance, and it is said this was for the conduct of the employer's trade. So this is for the benefit of Juan's employer or for ABC company. Therefore, this is not a compensation income of Juan. This is an expense, a travel expense or an allowance expense of ABC company, but not a salary expense of ABC company. This is not a compensation income of Juan. This contribution shall also be deducted once we will compute the net taxable compensation income, and this withholding taxes shall be used when we compute the annual income tax due and payable. Also, Juan reveals the following data for his business in his practice of profession. So we have here professional fees net of 10% expanded withholding tax, and that is 1,800,000. So this 1,800,000 is only 90% of the gross amount because this amount is net of the 10% EWT. We also have here gross sales from retailing business and cost of sales from retailing business, and that is 215. We also have dividends from domestic corporations and other incomes not subject to final withholding taxes of 200,000. And Juan also claimed the following deductions: expenses for his practice of profession, and that is 900,000 pesos. But 10% of this amount pertains to the receipts which were damaged. So meaning to say those 10% is non-deductible. And we also have expenses for his retailing business, and only 30% is receipted, and the amount is 100,000 pesos. So from 100,000 pesos, only 30% of that could be deducted because the other 70% is non-receipted. And as we have said, expenses should be substantiated in form of receipts. We also have here interest on loans which is used for his business, and that was 10,000 pesos. So this 10,000 is not the loan but the interest on that loan which was used for his business. And we also have depreciation of office equipment of 25,000 pesos and expenses for personal travel abroad during Christmas, and that is 150,000 pesos. So actually this problem is quite easy and not complicated. We will just have to analyze what are these items. So this 1/8 is taxable, this gross sales is taxable also, and this dividends from domestic corporation, this is subject to a final tax which is 10%. Therefore, these dividends will no longer be added to Juan's taxable income. But the other incomes not subjected to final withholding taxes of 200,000 shall be added to Juan's taxable income. So we have here several requirements. So under assumption 1, we will assume that Juan chooses the graduated rates for both compensation incomes, professional incomes, and business incomes. And he will be using the itemized deductions. For assumption 2, Juan will choose the graduated rates for both compensation incomes, professional incomes, and business incomes, but in this case, he will have to choose for the optional standard deduction. And for the assumption 3, Juan chooses graduated rates for his compensation incomes, while 8% optional rate for his professional and business incomes. So therefore, we will have 3 solutions in this problem. Each solution will answer these 3 assumptions. So we will compute the income tax due of Juan under each assumption. And we will begin with assumption 1. So under assumption 1, Juan will choose the graduated rates and he will use the itemized deduction for his business and professional income. So our first step is to solve for the net taxable compensation income. So we have here basic salary of Juan before withholding tax and contribution. So when we say before withholding tax, mean to say before deducting withholding tax and contributions. So we don't have to add the withholding tax and contributions like what we did in our other videos. Aside from the basic salary of Juan, he also received fixed monthly allowances, and again, that is taxable because this is a fixed monthly allowances, and these allowances are not de minimis. The problem does not indicate that these allowances are de minimis, therefore they are taxable. And we will also have to add the taxable excess of 13th month pay and other benefits. So Juan's 13th month pay is 35,000 pesos. The other bonuses is 61,000 pesos, a total of 96,000 pesos. Take note that in this solution, we no longer add the travel allowance. Remember, the 65,000 pesos? Because Juan is a manager or a senior accounting head and he is holding a managerial positions. And that travel allowance was a fringe benefit. Therefore, it would be subjected to fringe benefit tax. Hence, that amount, that travel allowance is no longer added in this computation because it is already subjected to fringe benefit tax. And fringe benefit tax is a final tax. But you might be asking, what if Juan here is a rank and file and not a manager or holding a managerial positions? Then if that's the case, we will have to add that amount here in the 13th month paid other benefits, subject to the limit of 90,000 pesos. Because as a rank and file, that French benefit will not be subject to French benefit tax. Okay? So, the total amount is 96,000 pesos and the limit, the exemption limit, is only 90,000 pesos. So, therefore, there is a taxable excess of 6,000 pesos. So, we will add those together. We will get the total compensation income subject to regular tax of 356,000 pesos. And from that, we will deduct our contributions or Juan's contributions to the Social Security System, the PhilHealth, and HDMF or Pag-ibig of 27,000. Therefore, Juan's net taxable compensation income is only 329,000 pesos. Okay, this is Juan's net taxable compensation income. But before we can compute the income tax due, we will have first to solve for the net taxable business and professional income, because again, in the first assumption, both compensation incomes, business and professional incomes are subject to one tax regime, and that is the graduated rates. Our second step is to solve for the net taxable business and professional incomes using the itemized deductions. So Juan's professional fees or revenue from his practice of profession was 1,800,000, but that 1,800,000 is already net of the 10% EWT or expanded holding tax. We will have first to solve for the gross amount, since that 1,800,000 is already net of the tax. So to gross it up, we will just divide this by 90% because this 1,800,000 is only 90% of the gross amount. Therefore, the gross professional fees before deducting the withholding tax of 10% is actually 2 million pesos. And we will add the gross income from business. So we have here gross sales from retailing business, that is 420,000. And we will deduct the cost of sale, which is 215,000, to get the gross income from business. So the gross income from business is actually 205,000 pesos. And we will also add the other incomes not subject to final withholding taxes of 200,000 pesos. Take note that we no longer add the dividends here because the dividends was already subjected to the final tax of 10%. So our total gross income is 2,405,000 pesos. And after we have computed the gross income, we can now deduct the deductions claim. And we have here expenses for professional practice. And take note that in our problem, the amount was 900,000 pesos. But out of that amount, 10% of the receipts were damaged. Therefore, deductible amount is only 90%. Okay? Because the 10% there is non-deductible. So that is 810,000 pesos. And we also have here expenses from his retailing business, and it was said that only 30% was receipted. Therefore, the other 70% is unreceipted. So that is 100,000 times 30%. So 30,000 pesos. And we will also deduct interest on loans. Take note that the interest expense was 10,000 pesos. And that interest expense should be, or supposedly, subject to the limit of 33%. Okay? If you can still recall our discussion on interest expenses, if you have watched that video, it is said that interest expenses could only be deductible, but we will have to deduct the 33% limit, and that limit is based on the interest incomes subject to final taxes. But in this case, there was no given data whether one has interest incomes subjected to final tax. Therefore, there is no limit because there is no interest income subjected to final tax. So we can deduct the entire amount, the entire 10,000 pesos. We also have depreciation of office equipment, and that is 25,000 pesos. So the net taxable business and professional incomes is 1,530,000 pesos. So we have now computed the net taxable compensation income and the net taxable business and professional incomes using the itemized deduction. For our third step, we will combine the net taxable compensation income and the net taxable business and professional incomes. So combining them together, our net taxable compensation income was 329,000 pesos and our net taxable business and professional incomes of 1,530,000 pesos. Our total taxable income is 1,859,000 pesos. This is our net total taxable income. From then, we can now subject all these income together to the graduated rates. So here is our tax table, our graduated tax table, and we will have to look where in the tax table this 1.8 million falls. So this is 1,800,000 and this is over 800 but not over 2 million. Therefore, the tax due should be 130,000 pesos plus 30% of the excess over 800,000 pesos. Okay? So we will have to compute now our income tax due using the graduated rates. So the tax due on the first 800,000 is 130,000 and the tax due on the excess, that is 1,859,000 minus 800,000 times 30%. Therefore, the tax due on the excess is 317,700 pesos. So the total tax due is 447,000 $1,700. Okay? This is a tax due that should be paid by Juan for both his compensation income and his income from business and practice of profession. But remember, there were withholding taxes. So we will deduct the creditable withholding taxes. Number one, on compensation incomes, that was 30,000 pesos. And on professional fees, remember that the professional fees was subjected to 10% EWT. The 10% there, that 2 million times 10% or 200,000 could also be deducted from Juan's income tax due. So we have a total creditable withholding taxes of 230,000 pesos. So therefore, Juan's income tax due and payable is now 217,700 pesos. This is the remaining balance that Juan should pay to the Bureau of Internal Revenue once he will file for his annual income tax return. Okay? That's how you compute income tax due for a taxpayer who is a mixed income earner, assuming that he has chosen to subject all his incomes to graduated rates and to use the itemized deduction. So under assumption 2, it's a combination of graduated rates and using the optional standard deduction. So our first step would be the same actually. To solve for the net taxable compensation income, we will derive the same computation. We will derive the same figure for the net taxable compensation incomes. We have this, so we have basic salary, we have fixed monthly allowances, we have taxable excess, and we will have this again, a total of 96,000 pesos. And again, the limit is only 90,000. Therefore, the taxable excess is 6,000 pesos. And we will add that to our basic salary and fixed monthly allowances to get the total compensation income subject to regular tax of 356,000 pesos. And we will deduct the SS, PhilHealth, and HTMF contributions. And we will get net taxable compensation income of 329,000 pesos. Basically, the same computation from the assumption 1 when we compute the net taxable compensation income because there's no change for that. The difference under assumption 1 and assumption 2 will be on the computation of the taxable income because in assumption 2, we will use the optional standard deduction instead of the itemized deduction. So for our step 2 is we will solve for the net taxable business and professional incomes using the OSD. So we have here professional fees, net of 10% EWT, and again, we will have to gross it up by dividing by 90% to get the gross amount of 2 million, and we will add the gross sales from retailing business, and that is 420,000 pesos. And take note, and we no longer have to deduct the cost of sales because again, the basis in computing for the 40% OSD is the gross sales and gross receipts. So do not deduct the cost of sales and do not add yet the other non-operating incomes because they are not part of the business. And as we have discussed in our other videos, when we compute for 40% OSD for individuals, do not include the other non-operating incomes when computing OSD. So our total gross receipts and gross sales is 2,420,000 pesos. And we will multiply that by 40%. This is the optional standard rate to get the optional standard deduction of 968,000 pesos. And this is now the deduction, which covers both the cost of sales or cost of service and expenses. Okay, so this 968 is used in lieu of the expenses and cost of sales or cost of service. Our total gross receipts and gross sales of 2,420,000 will be deducted by optional standard deduction of 968,000 pesos, and we will get the taxable business and professional income. But then, don't forget the other non-operating incomes which are not subject to final withholding taxes of 200,000. So our net taxable business and professional incomes is now 1,652,000 pesos. So this is now our net taxable business and professional incomes using the optional standard deduction. From then, we will have to add together the net taxable business and professional incomes and also the net taxable compensation income. So our third step is to combine them together. So we have a net taxable compensation income and net taxable business and professional income of 1,652,000 pesos. So our total taxable income is 1,981,000 pesos. And from then, we can now compute our income tax. So this 1,981,000 actually falls on the fourth row, and that is over 800,000 but not over 2 million. And the tax due is 130,000 for the first 800,000 plus 30% of the excess over 800,000. In computing Juan's income tax due, we'll have here the tax due in the first 800,000 is 130,000 pesos, and the tax due on the excess is 30%, and that is 1,981,000 minus 800,000 times 30% to get a total income tax due of 484,300 pesos. However, we still have to deduct the creditable withholding taxes. So that is on compensation incomes, we have 30,000 pesos, and on professional fees, we have 200,000 pesos. So Juan's annual income tax due and payable is only 254,300 pesos. So if you're trying to compare which tax due is higher, of course this is higher, and Juan would better or would benefit if he would use the assumption 1. He will use the itemized deduction. So this 254,300 pesos is the income tax due of Juan if he chooses graduated rates for both compensation incomes, professional incomes, and business incomes using the optional standard deduction. So under assumption 3, Juan chooses the 8% optional rate for his business and professional incomes. So you might be asking, is Juan qualified for the 8% optional rate? Well, to answer that, you will have to add first the annual gross sales and receipts and other incomes if it does not exceed 3 million. And as we have discussed, as we have noticed in our previous assumptions, it does not actually exceed 3 million pesos. Therefore, Juan is qualified for the 8% optional rate. So in this assumption, we will have two tax regimes. Number 1, for compensation incomes, it will be subject to the graduated rates. And for the business and professional incomes, they will be subject to the 8% optional rate, so two tax regimes. Hence, in this illustration, we will separately compute the income taxes. So our first solution is to solve for the net taxable compensation income and its corresponding income tax due using the graduated rates. Again, for compensation incomes, it will always be subject to the graduated rates. So we will have the same solutions. Actually, we will get the same figure. Our net taxable compensation income from our first two assumptions will be the same under the third assumption. Our net taxable compensation income is still 329,000 pesos. And after we have computed the net taxable compensation income, we are no longer have to wait for the second step to compute the net taxable business and professional incomes, because after we have computed the net taxable compensation income, we can now directly compute the income tax due using the graduated rates. We will just have to look the 329,000 pesos net taxable compensation income in our tax table, and it is over 250 but not over 400, and the tax due is 20% of the excess over 250,000 pesos, because again, the first 250 is exempted from the tax. So our tax due is, for the first 250, it's exempted, it's 0, and the tax due on the excess, that is 329,000 minus 250,000 pesos times 20%, and the tax due here is 15,800. So that is the tax due of Juan from his compensation income. And again, there was a withholding tax, but I prefer not to deduct that here because we will have to combine the income tax dues later on. So after we have computed the net taxable compensation income and the total tax due of 15,800, we can now go to step number 2. Our second step is to solve for the income tax due on business and professional income using the 8% optional rate. So we will have to solve for the annual gross sales and receipts and other non-operating incomes. So we have here professional fees net of 10% EWT, and again we have to gross it out to get the gross amount of 2 million pesos, and the gross sales from retailing business, that is 420,000 pesos. And again, we will have to add here the other incomes not subject to defined withholding taxes, because the basis of the 8% optional rate is the annual gross sales and receipts plus other non-operating incomes. Hence, we will add the 200,000 pesos here to get the annual gross sales and receipts, plus we have here ONOY. Actually, ONOY is other non-operating incomes, a total amount of 2,620,000. So obviously, Juan's annual gross sales and receipts do not exceed 3 million. So he's qualified for the 8% optional rate. And then we can now multiply by 8% optional rate to get the tax due on business and professional incomes of 209,600 pesos. You might be asking, why don't we deduct the 250,000 pesos exemption limit like what we did in our previous video lectures for professionals and business income earners? The reason is that we can no longer deduct the 250,000 pesos exemption limit from the 2,620,000 that we have already availed that exemption limit when we computed the income tax due on our compensation. The taxpayer has already availed the exemption limit of the 250,000 pesos when we computed the graduated tax rates. Remember, in our solutions just a while ago, we have already claimed the 250,000 pesos using the tax table. Hence, we can no longer deduct the 250,000 pesos here. So, the tax due on business and professional incomes is 209,600 pesos. And we will add them together. Our tax due on compensation income is 15,800, and our tax due on business and professional incomes is 209,600 pesos. And from then, we will get the total tax due of 225,400 pesos. This is the amount that should be paid by Juan, but Juan has withholding taxes on compensation and on professional fees, a total of 230,000 pesos. Therefore, Juan's income tax due and payable is actually refundable. It's 4,600. It's negative. It's refundable. Under assumption 3, Juan will no longer have to pay to the BR, unlike assumption 1 and assumption 2, where Juan would still have to pay for 200,000 plus income taxes. But in this case, in this assumption, Juan has a negative figure. So what will Juan do for this amount? Actually, he can carry over that in the next succeeding taxable year. That's it. That's how you will compute the income tax due for mixed income earners. Again, for compensation incomes, always use the graduated rates. For business and professional incomes, it could be subject to graduated rates or to the 8% optional rate, depending on whether the taxpayer exceeds the 3 million VAT threshold. So I hope you learned a lot from this video, and I hope you had watched other videos we have about how to compute income tax dues for individual taxpayers. If you're new to this channel, please subscribe, click the bell, and give me a thumbs up. Thank you for watching.